Hey folks, welcome on Propelled. I am Rahul and this video is the much awaited one because we're going to talk everything about the education loan guidance for your children's education. This is the one after which you're going to thank me for providing such rich content. So stick till the end and without any further ado, let's start. Let's start with the basic of education loan. What basically is an education loan? So education loan is nothing but a financial instrument designed to help students and their families to cover the cost of education, including tuition, books, accommodation, and other related expenses. These loans are typically offered at lower interest rates than any other type of loans, and they often come up with more flexible repayment terms. So education loans also are categorized into various types. First one being direct subsidized loans. These are those need-based loans where the government covers the interest while borrower is in the school. Then you have direct unsubsidized loans that are available to eligible students regardless of financial need of them. Interest accrues from the day of disbursement itself. Some are parent plus loans. So, repayment option is given to the payment. So the education loans are available to parents of dependent undergraduate students over here. And then comes the chance of career education loans that are aimed at students that are attending the vocational or career schools. So they're not going for the regular courses, but they are actually attending the vocational or career schools. Referencing loans is also one of the category where borrowers with existing education loans may opt to refinance to get better interest rates and terms. So over here, the one who has taken the education loan will opt for refinancing of the same loan. Let's begin an interesting conversation. You are a parent that belongs to a family that earns 8 to 10 lakh rupees per annum. How are you going to plan your future? I mean, your child's future for education. The first and foremost step over here is set a clear goal. Determine the type of education you actually envision for your child. So it can be for school, college, professional courses. Estimate the cost that is going to be involved over here, considering tuition fees, accommodation, books, and all the other related expenses. You need to factor in inflation to get more accurate picture of the future costs. One more important point, you need to start early. The earlier you start saving, the more time your investments have to grow. Compound interest can play a very significant boost to your savings over the long term. You need to have emergency fund. So before investing for the education, ensure you have an emergency fund in place. This fund should actually cover 3 to 6 months worth of expenses in case of unexpected financial setbacks any point of time. Regular savings are also going to give you an actual boost. Dedicate a specific portion of your monthly income to education fund. Consider setting up a recurring deposit, or you can actually plan for systematic investment plan in the form of mutual funds. Now you need to explore the education loan options also. So investigating education loan options as they are going to ease the financial burden during the actual education loan period. Be aware of the terms and conditions, the interest rates and repayment plans. Government schemes can be big savior over here. So research government sponsored education schemes, scholarships, grants that might be available during the course of education loan. Some scheme offer the tax benefits, so explore those options too. Investment options are very, very important. So consider a mix of investment options based on your risk tolerance and time horizon. Common options actually include the mutual funds, provident fund, fixed deposits and ELSS, equity linked savings schemes. Insurance planning is critical and important. So make sure you ensure adequate life and health insurance coverage alongside education loan. This safeguards your family financial well-being in case of unforeseen circumstances. It also becomes really very important to periodically review and adjust the things that you are actually planning. So reassess your financial goals and adjust your savings and investment strategies in accordance with the same thing. Stay informed about changes in education costs and adjust your plans as needed during that course of time. Last but not the least, tax planning, because Government of India is offering a lot of tax benefits to take advantage of them, such as Section 80C, deductions for certain investment, also in 80E and Section 10A. Consult with the right tax advisor to optimize your tax planning strategies as well. So we started this conversation by actually talking about your family income. So your family income was 8 to 10 lakh rupees per annum. Now all these points should be kept in mind when you're actually putting your family income in place. Similarly, if your family income is less than 8 lakh rupees, 6 to 8 lakh rupees or more than 10 lakh rupees, any number, you can actually plan on all these points that I actually mentioned. Just pause this video, revise again all the points and make a plan for self. So you've taken the loan, now it becomes really very essential to repay that loan as well. So what is loan repayment? The term loan repayment refers to the act of returning borrowed money to the lender, typically in periodic installments, as outlined in the terms of conditions of loan agreement. When an individual or entity borrows a money, they enter into an agreement with the lender that specifies the amount borrowed, the interest rates, and the repayment schedule. And there are a lot of relevant terms. I'm going to tell you about them one by one. First one being the principal. It's actually the amount that is actually borrowed from the lender. The second term being interest. The cost of actually borrowing that particular money, that is expressed as the percentage of the principal. Interest is typically added to each repayment installment. The next one being repayment schedule. So it's the agreed upon plan outlining when and how often the borrower is required to pay the payments. Common repayment schedules include monthly, quarterly, or annual installments. What is an installment now? So installment is nothing but a payment made at regular intervals, usually monthly, by a borrower. Each installment typically consists of a portion that goes towards repaying the principal and other part in the repayment of the interest. One more crucial term that's often being used in loan repayments is amortization. So what is it? The process of gradually reducing the loan balance over the time period through regular payments. Amortization schedules ensure that the loan is paid off by the end of the agreed upon term. One more term that's often being used in loan repayment is grace period. So what is it, grace period? Some loans offer grace period allowing borrowers a specified period after graduation or leaving school during which they are not allowed to make any payments. Prepayment, a very crucial term that's being used in loan repayment. Borrowers may have the option to pay extra payments or pay off the entire loan before the scheduled term ends. However, prepayment terms vary and some loans may have penalty for each repayment. One more term that's often being used is default. So what is default? Failing to adhere to the agreed upon terms of loan can lead to default. Defaulting on a loan has serious consequences, including damage to credit, legal action against the borrower, and potential loss of the collateral. So education loans are reclassified into three broad categories. First one being graduate student loan, second is undergraduate education loan, and third is professional education loan. So graduate education loan helps you to cover the cost of tuition, fees, books, and living expenses during the graduate studies. In undergraduate education loan, they help you during the undergraduate time or the bachelor's degree time. And when we talk about professional education loan, this is designed for beyond the undergraduate level studies and professional courses that involve law school, medical school, business school, or other specialization fields. So when you talk about borrowing, it is important to borrow really very wisely. Some steps that can help you borrow wisely include understand your needs. So assess your financial situation and determine if borrowing is actually necessary or not. Consider your goals and prioritize your needs over wants. This is the first step over here. Second is creating a realistic budget. So develop a realistic budget that includes your income, expenses, and saving goals. This will help you understand how much you can afford to borrow and repay as well. Explore grants and scholarships. So before resorting to loans, just explore grants, scholarships, and other forms of financial aids that don't require repayment. Research loan option. So this is very, very essential because you're going to understand the loans available and their terms, interests, and repayment options as well. You need to compare the interest rates as well. Compare the interest rates from different lenders. Lower interest rates can significantly reduce the overall cost of borrowing. Borrow only what you actually need. Avoid borrowing more than necessary. Calculate the minimum amount required to meet your needs and resist the temptation of borrowing is the final advice from my side. So once you borrow, it's time to repay back, and there are a lot of repayment options available. The first one being fixed repayment plan. So very easy, fixed monthly payments over a specified term. Second is interest only repayment. So pay only the interest for a specified period before the principal payments begin or the EMI options begin. Third being deferred repayment. So postpone payments while you are in school or during the grace period. Interest may accrue during this particular period. Fourth one being graduate repayment. Payments start lower and gradually increase over the period of time. Then one more option is open for you, that is refinancing. So explore the refinancing options as well with the private lenders or potentially lower interest rate lenders for better terms. If you're taking education loan, ask yourself, are you financially responsible or not? There are a lot of things that will help you evaluate, are you financially responsible or not? First one being budgeting and saving. Financial responsibility involves creating and sticking to the budgets, tackling income and expenses, and prioritizing savings for emergencies and future goals. Debt management becomes priority as well. So responsible individuals actually understand the loan terms, make timely payments, and avoid unnecessary borrowing. Strategies like debt repayment plans contribute to financial stability. Education and planning is also crucial over here. Continuous financial education and goal setting, including retirement planning, are key aspects of responsible financial behavior. Disciplined spending is the key over here. So financially responsible individuals exercise discipline in spending, avoid impulsive purchases, and focusing on needs over wants. Teaching and values is crucial. So instilling financial responsibility involves teaching others, particularly the next generation, about money management, credit, making informed financial decisions. This contributes to long-term economic stability. The next one being a repayment schedule. So it's the agreed upon plan outlining when and how often the borrower is required to pay the payments. Common repayment schedules include monthly, quarterly, or annual installments. What is an installment now? So installment is nothing but a payment made at regular intervals, usually monthly, by a borrower. Each installment typically consists of a portion that goes towards repaying the principal and other part in the repayment of the interest. One more crucial term that's often being used in loan repayments is amortization. So what is it? The process of gradually reducing the loan balance over the time period through regular payments. Amortization schedules ensure that the loan is paid off by the end of the agreed upon term. In this video, you explored a lot of insights about education loan. Next video, we're going to bring some rich content like this. Stay tuned.